on those risky trades or pace or currency or whatsoever they feel it can give a high probability of returns. So for some time now, Aussie and the New Zealand have been a good risk on pay, and USD, JPY, and the Swiss franc have been, from time immemorial, a good risk of pay. Okay, so during risky period, investors are looking for ways to invest their money. During risky period, they'll hop on to the Japanese yen. So that's where most of the investment will go. That's where the money will go. There'll be great demand for the Japanese yen during that period. And it kind of creates demand. And where the demand is, there is increase in price. The higher the demand, it take the price up, okay? So, but for now, yesterday, a news came out that there is an earthquake about 6.1 in Japan. So I don't know the effect of that yet, but whatsoever the fundamental is saying, it is going to definitely reflect on the technical, because the technical shows you what the market is doing, and the fundamental tells you what the market will do. So the first pair we're going to analyze for the major currencies today will be the pound USD. All right. For the pound USD, we spoke about this pair for a long time, and we captured most of this move to this point. And when the pair broke down below, what we wanted to see was a retest. And from this point on, we captured this move to this point, and we hopped out of the trade because of this level. All right. So let's see where we are, identify points on the market. So we captured most of this move from the downside to this point, from the 1.16700 to this point here because of this structure here. And right now we had it that price broke above this structure, right? Because personally, I don't like to be in a trade where the where price is close to structure unless I have a reversal pattern. And we had it that now price has tried to break above the 1.2500, which has been a key structure, because here we had it that here was the left shoulder, and we had the neckline here, and we had this push to this area here, which is the 133,200. And what we wanted to see for a push on upside, we wanted to see that this area of support, which is the 1.2500, will hold. And once it fell to hold, and we actually joined the trend down here to profit val and back up here. So we are now back at the retest of this point. It is not yet proven that this point is being broken or it can hold. So we just have to watch out for a reaction, either to buy off above or to sell below. But at the moment, we don't have a good trade, because looking at it technically, on the weekly, everything looks bullish. And for this candlestick on the weekly, it tried to break above, but it couldn't close above the 1.2500. All right. So let's look at it on the line chart. You can see that it did not close above, so we are still trapped below. So for the pound bull, they're actually watching out for this level here. But for the bear, which I am actually looking to be part of, because I'm expecting the dollar to actually get a bit of momentum, and then, be very strong. All right. Now, this was the level of structure. So let's look at it on our line chart. This was the level of structure here, this structure here, this structure here. So this was resistance. This is now support, and it might still act as support for the push to the upside. All right. So before I will be having a trade here, I want to see this area of structure being broken. And this area of structure here is the 1.24300 being broken, and I want to see price close on the daily below the structure. All right. So once that can happen, I will look to sell on the retest here because we had this trend line initially, and this trend line here, after being broken, is not good enough. All right, it's not good enough to push price at one go. Hold on, let me see what is happening here. So it's not good enough to push price at one go since a breakout of this trend line. And we have a support here. I like to teach my students that you want the market to commit to you before you commit to the market. All right? Trading should be like driving. If you're coming out of the store, you're coming out of your house, and you want to head to a direction, and you have a car in front of you, and in front of the car, or the car in front of you, you have a blinker on, and you have it that the car is blinking that it has plans of turning to the left. You should not start drawing conclusions that it is actually going to do that. You want to see the car slowing down. You want to see the wheels turning, and before you can then say 80% out of 100 that there is a clear intention of the car turning that direction. So you want to have it that the market commits to you before you can commit to the market, all right? So this will be a clear indication of a commitment to our trade plan. Once we can have a break below here, all right? So on the retest, we can open a sell at this point, all right? And open a sell anywhere around the 124, 400, and we'll have a stop loss here around the 126, 500, all right? So we believe that price will want to come down first to target this area here, all right, because this was different level of structure. So for this trade here, one entry here to a target here is 257 pips, and the risk here is 200 pips. So it's a nice position to be. 1:1.7, the nice position to be with a good lot size. All right. So let's go down to the USD CHF. USD CHF is still within a buy zone. All right. We are still around the buy zone, and we can still have a buy inside of this area. Why we can have a buy inside of this area here? Because looking at the fractal, all right, we have it that this was a low. Markets made a push, so we can add one more tool to our chart to really see what is happening. And great. All right, so we can add one more tool there. All right. So we have it that market made this push, and market has been in an uptrend. It was a low, higher high, higher low, higher high, and since then it was a low, so we are still within the range. One can open a trade here, all right, while his risk will be somewhere around 228 pips to target the upside first, 47, 44 pips. That's on the H1. For the H4, all right, for the H4, one can actually hope to back the structure here from that point on, which is 80 pips. So that's the 1:4 risk to reward. So it's a good position to be. Well, we can see that this trend line here is broken, or this resistance, but once you see it broken, it's broken. And this trend line here, when broken, was where we entered the trade on the retest at this point. All right. So we are here, and we have reasons and confirmation to still ride this pay into this target. All right. Okay. going to speak about USD From last week, USD we had it that here was an area we wanted to see a rejection or a buy from. Because this was the level of structure here, the 10700. Once price bounced up here, we're expecting a double bottom, and that's what we are seeing. So we expect to ride this play up to the 109,500, which is the level which we have a pending sell order. All right, you have first pending sell order here. The right risk we want, and we have our risk up here, 317 pips, and we have a reward down. All right, so this is how we are looking at JPY structurally from a weekly perspective. We have it that since this impulse, right, from this point on, and market has started doing a correction. So this was a zero swing high. This was our A leg, right? This is a B leg, and we expect to have a C leg. So using our Fibonacci tool, we take a Fibonacci from the A point B, and we expect our C leg. We expect our C leg to be around this point, which is the 9400. So that's when we expect our C leg. So we want to see the market push down to that area on the long term. And we are having confirmations that there is a clear intent of the market pushing into that zone. Because since the B leg, what we have had is a high, a higher low. Yeah. Okay. This is a high, and this is a lower low, a lower high. And since then, the last lower low market made was just a week, all right? So we had it from this point, we had a sell from this point while our risk was here into this area. So we covered up the trade. And as I'm speaking, the market is not yet able to break into this zone completely. So we're having a buy from this point back into this zone because the block structure. Believe that price will then start from this point to ride into this zone here. So from that point on, want to ride the pay to 104,700. That's what we want to ride the pay into, because this was a level of structure where price bounced up, and you could see that this was actually market trying to break this area here, but it did not happen because market actually opened inside of the area but couldn't stay, and market then went up from that point. So market is need to confirm that we can dwell in the area. So we want to sell from this point back into the zone until there is no confirmation that market can actually start dwelling inside of the zone below the 104,700. All right. So the situation with it and how you can be involved in it as a trade or a trader for trading angle. You can wait for a pullback. All right. One can wait for a pullback into the zone. So a pullback. Okay. Pullback into this zone is a nice place to be. 107,600 probably, a nice place to be. While your risk should be somewhere below here. So from this point, you can have your risk to be 50 pips, and you can have your reward to be 90 pips up to the 108,500 first, which is the TP1, and the 109,500, which is TP2. So at about 190 pips. Okay, a nice place to be. Okay, for USD card. For those of you that missed the USD card last week, we are still within the range. All right. But for trading purpose, all right, because we had this day here. For trading purpose, and I want you to wait for a bounce of this area. 1.4, one can actually have a pending order for 1.41, or 1.401, all right, 1.401, all right, because of spread, and open a pending order here while your stop loss will be at the 1.392. All right, so from that point, your risk will be 80 pips, and your first target area will be the 43,200. Okay, so let's identify why we want that to be our target. From an Elliott wave perspective, all right, we analyze this phase since 2 weeks, and we said that we can only buy this pay down here, not here, but down here, and that was what we did. And we can only sell this pay at the 1.43700. All right, so that's the area which I can only sell this pay from, and anything less than that, it's no go area for me. It's not a brainer, because looking at this, for those of you that actually wrote this pay around here with us into this high, this was the wave 3, and this was the wave 4. This was the ABCDE, perfect. Solid textbook. So we had a buy at this point, and which terminated here. Once the market was above here, we wanted to have a break above the D leg. So we had a buy stop here. Had a buy stop around the 1.83700. Our stop loss was here, 185 pips, right? And we had it that we want to be here on our wave 5, all right? Because this was a 2-way, the third wave. So our wave 5, we want to test this area here, which is actually back. So 1.43200, all right? And we hopped out of the trade. So what we're waiting for now is the correction. We have that the correction has started, all right? So we hopped into this trade around this point for a sell, and we hopped out here because of the structure here. But this point is not the area which we wanted to buy. We want to see a more deeper retracement to A. And why we wanted to see a deeper retracement to A using our Fibonacci tool, from the swing low to the swing high, you can identify that this was the 127, all right? So we wanted to see a clear structure around that point. From then on, we can start looking for trades and trade ideas, all right? Then we are here for the trade once we started having this bounce off. And we had it at our 2 here. Here was a signal, this point. Volume is spiking up here, double, up into the trade. And that took us to breaking this trend line here. This was our XYZ here. So we have XYZ, X, Y, X. For those of you that actually can understand it better, it was an XYZ and XYZ. So it was a complex XYZ pattern to form an A, which is this point. And we expect our B leg to be inside of this zone. We have a range from the 1.43700 to the 1.445, when we expect the leg termination. Why do we expect that? Because if you use your Fibonacci tool from the swing high to the swing low, you identify that the 61.8 Fibonacci level around this zone. So that's where you want to be looking for sales when it comes to USD cash. So you want to be looking for sales. So this is correlated, or this is also similar to the case of USD JPY, the case of USD CHF, the dollar index. You want to see a push first before we can have a sell, and also the USD Mexican peso. So we have those trades correlated in setup. All right. So we're going to be looking at the euro card. For the euro card, all right, you identified a pattern here, a running flat. So Friday, early morning, by running flat here, lower time frame. Identify the running flat. which was here. All right. What I did here on a Friday was identify the running flags here. At this point, all right, where I assume to be the running flag. And when I got this filling candle here, I hopped into the trade. And at this point, I hopped into the trade. And at this point was where I wanted to place my stop loss. And the next candle came filled in, second candle came filled in, all right. Third candle then pulled back. Next candle gave another feed in. It was a strong position to be. So market then came and hit my stop loss out of the market. But those here, this was our big point, right? So a more conservative trade would have been for a break above the big point. A more conservative trade would have been a break above the big point, all right? Because the core value of an Elliott wave or the core value of an Elliott technique, it identifies points which you can start making trade decisions, all right? And also identify points of possible ruin, okay? So it shows you when you're wrong. So a more conservative trade would have been for a break above this point, this high leg, and on the retracement, it would have entered the trade. But I did not pay great attention, all right? And as my strategy, I opened a small lot size here with the right risk to reward. So I was just risking from this point on, this area here, 10 pips to target 45 pips. So I was stopped out of 10 pips. So it was still a good trade. I don't like sleeping on a bicycle. All right, it was still a good trade. The very first step of actually being successful is when you're saying that was a good loss. So it was a good loss for me. And we have this breakout of this trend line at the moment. All right. We have this breakout of the trend line. All right. So we can look for opportunities to be involved. All right. And we have it that this was a high. So if we can go right in to add our fractals, all right, we can identify points. The price that this was a high, and so far price have not yet taken over the high. All right. On the course to the fall to the high. So we want to see price taking over the high here. Once price can take over the high, okay, you know, see around the 152.99, haven't taken over the high. So it's not a good place to enter a trade yet. You want to see this high taken over. Once the price can break above this high here, all right, we're still within the range, all right. Market can actually still do a push down even after a break above this trend line, all right. So when we see price taking over the high and on the retest, we will look to go long, all right, because our overall buyer on this page is for a long, all right. The Euro JPY is open for a trade, so I will be calling a trade at the moment. Right now, I'll be giving out a trade on this session. All right. We had it that during the course, price was down here, and I wanted my eyes to be very shine. So I had to shine your eye feeling, and I could identify that this was a trend line and it's broken. But also identify that during the course of this movement to downtrend, all right, the downside, the RSI was forming a low here. From here, it started forming a lower high, all right. So from there, we identified that this was not a lower high. This actually became a high here, a higher high, a higher low, all right, and then a higher high, a higher low, and market failed to make another high, all right, until now. And while market was actually moving in a downtrend, the RSI was moving on an uptrend. So this is a divergence, all right, divergence, but it's not actually a good time to enter the market We want to see a break above this trend line. Now we have, all right? So I'll be calling a trade at the right now. I'll be calling for a pending order, all right? Can open a buy on pending order. All right, can open a pending order for a buy inside of this area, just above the pivot. All right, and you can have a stop loss at the 116,500. 116,500 is a stop loss. All right, so you can take it down. 116,500. All right, so a buy is at the 116, 117. All right, so this is a round figure. Let's see how that aligns better. All right, so it goes where, so let's go down to the H1 so we can actually get our trade entry, right? We don't want to risk much risk. We have a rejection of this point at the moment. So we are going to adjust this to 116,700, 11697, 11696, and our risk will now be 1165. All right, so that's where we want to be. This rejection is not good enough here, in my opinion. So I want to reduce my risk. So now I'll be risking $12, all right? And my take profit, my TP1 will be the 118,200, all right? So my TP1 will be the 118,200, 118,200, all right? All right, so I'm risking $12 to make $34, all right? I'm not looking at the profit, I'm only looking at the risk. That way I like to look at first while I'm involved in the trade. So I will take a more conservative trade, take profit here. And from a daily perspective, all right, you can then tend to tackle this point because this is a trend line, all right, here. This is a minor trend line, this is a major trend line, all right. This trend line have come way back 2018. So price have always bounced off this point. So this is a minor trend line and this is a major trend line. So we hope to sell this play on the major trend line. Last week, during when this play was here, I actually gave out a sell signal from this point into this target here because this was the target where I wanted to buy. So we hope to have a trade here and the market's then rallied here. So you can see that this is the buy zone. All right, if I come right up here to add a fractal to it, identify that you have that field of bound of this area. All right, you had a bound here to low, lower high. All right, low. So market have started from this point to bounce off the zone. So that's the position where we want to be. Same goes with the CHF JPY. All right. All right. So same goes with the CHF JPY. You have a trade call here in the morning. So because of the trend line here, you want to buy from here into this target. So this pay here, the CHF JPY and the Euro JPY looks kind of symmetrical, looks kind of identical. All right. It's identical in behavior, in character at the moment. All right. Looks identical. We had a trade call here in the morning. We have a trend line here. And you look at the fractal, this was a triple bounce. So that was why I had a call here. You had a triple bounce. And after the triple bounce, you want to buy, right? So for now, you can wait for a retest of the trend line. You can open a buy and just your risk. Your risk Okay, the raise from this point, from the pivot point, which is the 1116, the raise now will be 42 pips, and your reward TP1 will be 130 pips and 185 pips. So TP1 can be here, all right, 112, 400. So let's be more conserved. Let's not be greedy, all right? Because two things move the market, fear and greed, all right? So psychologically, I'm advanced. I can be able to handle myself. I don't like being greedy, and I don't like being too afraid to take a decision, all right? So our TP1 will be here, and our risk now will be 110, 700. So this is a good trade, even at this point, because risk is 63 pips. Reward TP1 is 110 pips, almost 1/2, and TP2 is 173. All right, so it's a good trade at the moment because we have price in an uptrend. All right, so we can believe that price will continue moving. All right, before price will change direction, you can believe that it needs to take out the 110 and close below on the daily. All right, so for silver, here is a zone that needs to be broken for the bear. All right, you need to wait for a break below this zone, and for the bulls, you need to wait for a break above here. All right. So at this point in time, we are not making any decisions. For now, we want to see either a break above or a break below. Then we can then make decisions. So if there's a break below here, to this point, there's a commitment. All right. We wait for a retest of this point, be committed, and we will then sell into the zone. All right, which is the 13900. But if there's a breakout, all right, from this point, we wait for a retest, all right, and we will buy from that point of the retest into this point. All right, so that's the situation with silver. Then for gold, all right, for gold, we backed over 1,000 pips from this trade, from this point 2 weeks ago, and we hopped out of the trade. And at the moment, we are not expecting that price should come back to this neckline, because if it has the intention of coming back to this neckline, it would have halted around this point and not come up here much. So we're looking at the retest of the zone here. A lot of people have asked why this zone is all right? Go down to your line graph, all right? You see that this was a key zone, that we have another key zone here, all right? I've seen many analysis, all right? But I believe in what I do, and it has kept me running for over years. I will not really explain this at the moment because there's some information that I cannot actually give out right now. But to the best of my idea and in my own opinion, one of the reasons I'm going to show to you, all right? For individual candlestick analysis, let's examine. Look at this move here, the candle arrangement, the angle of inclination, the angle of movement here, all right? This was an impulsive move, all right? So if you take a feed from this swing low to this swing high, you can see that the correction here was shallow, all right? It was a shallow correction, and we had that a trend line bounced off it. So once, and there was another touch of the trend line going to buy, right? So this was a shallow one. Boom, it's 8.2, boom, right? And from that point, the market then made another push to the upside from this point, from the swing low to this other high, and this was the 23.6, all right? So we drew conclusion that for this to happen, this is just starting, all right? That there's more to this movement than just this, all right? From an alert perspective, which I'm not gonna explain right now, all right? So from this swing low now to this swing high, we have that price should at least come back to the 68.1 because this was shallow, all right? So this can be our 0, this is our A, our B, and this can be our C, and we expect our D to be around this point because of this structure here. By retest at this point, and from here on, we can look to buy with a confirmation or an evidence of a commitment to the upside. All right, so that's what we expect to see of gold. For now, we don't have any viable trade, unless gold can make another push to this area. All right, and then we have a bounce of this area. Then our risk will be reduced and our reward will be massive. So we can then sell from here into this area. All right, that's for gold. And we'll go straight down to looking at one more thing, which is the BTC USD. Yesterday, we gave out a trade call. Okay, for yesterday, that was on Friday. We gave out a trade call that students should actually buy BTC here. For those that actually want to hold on to, can actually buy and then hop off around this top here, which is the 2400. All right. Because we had that this was a very strong move. All right. It was symmetrical to gold. Let's go down to the smaller time frame so you can get the clearer picture. All right. And we had it that when the price is here, it made this move from this swing low to this swing high. So this was boom, bullseye. All right, it's 8.2. So from this point, price then made another push in here, and once price was able to break above here, our analysis had it that we want to see a retest. All right, and from this swing low now to this swing high, we wanted to see a much deeper retracement. All right, below the 8.2, somewhere close to 50%. Okay, same scenario with gold. All right. So once market actually broke below here, on the H1, we had it that price then started consolidating, making another push to the upside. All right. And using this trend line here, had a pending buy order, the buy stop here around the 66.87, and it was triggered while our stop loss was below here. It was 207 pips. All right, and at the moment we have not yet hit our target. We're still having that trade running. Our target one will be for price to hit this point. All right, that's 7,400. That's our target. 71,400. All right, that's our target. Price to hit this point here. 400. Let me add a line. All right. Okay, so this is our target, and it is not yet attained. All right. So I mean, our price is going to attain that height. From here to our target, we have 229 pips to back. All right. So it's a very nice place to be. Okay, let me know if there are any questions. We're about to wrap up this Monday session. We'll meet again on Wednesday to see what the market is doing and actually how we can actually benefit from it. All right. So let's know if there is any question. Right, we have a retest of the AUD NZD. Retest is happening, so we can look to buy from here. It's a very strong move. All right. Let me just go recap some markets. All right. We have that we want to have a sell from this point. All right. AUD JPY. We need a break above. All right. So we just want to market recap. And here for the fake out. But it can also be a reversal pattern. So we never can tell until there's a clear indication that it has plans of movement to the upside. So we can never tell. All right, so we're wrapping up this session. For CAD JPY, for the bulls, you need to be very careful at this point because you have one touch, second touch. All right, so normally you should be buying look at JPY, but you want to wait for a break above this trend line before you go long, all right? Because the trend line, we hopped onto this play around this point 2 weeks ago, and we hopped up here around this point. But this was a choppy move, okay? It was a correction. Look at the angle of this move. It was an impulse, all right? The correction of this impulse, and we hopped into this move about 68.1 Fibonacci level, hopped out. Then the price started going back down. So we never hopped into this trade again because of the card weakness. All right. So if you have anything to be involved in this trade, I will advise you wait for a break above first, this trend line, before you can hop on. But price can bounce up here and then continue to down. All right. So if there are any questions, so unmute yourself and ask any question, and I'll try as much as possible to answer it very fast as I can. Okay, believe there are no questions. Let me go right into Facebook channel. See if there are any questions before we can call it today. All right, if there are no questions, Facebook. All right, no questions from Facebook. Okay, let's look at our YouTube channel. If there are any questions. Okay, there are no questions. Okay, one is coming in right now. Okay, let's see if we can address this. Okay, someone is asking for analysis on Euro USD. Okay, Euro USD. Euro USD. Let me see. Let me look at USD. Quickly wrap up. Okay, so Euro USD from YouTube. Euro USD. Okay. At the moment, we have choose not to be involved in this trade in any sort for now, maybe till next week. All right. Why? Because we had a buy order here, and we got up the trade here. And we wanted to see a bounce off this trend line. All right. Now, at the moment, it seems that the trend line is broken. And when we have the next support, it's just 107,800. All right. So it's not really a very far away point, trend line from price. So we cannot be involved in this trade. We have to wait till price come back into the trend line. All right. So if we add our fractal, okay, boom, we add our fractal to here, going to find that this is a double bottom. All right. So we can wait for price to come in here and do a triple bottom. Rather, we have to wait for price to come in here, confirm what's the triple bottom, then we'll buy from here to target the $1. All right. So from the H4, we had a breakout. All right. And technically, from a textbook definition, after a breakout of the trend line, is a retest. And we expect it to sell from this point. All right. So we can't do that at the moment. We have to wait for a bounce of this area because this was a double bottom too. Another bottom. We need to wait for a confirmation of where we want to be on this market. Then we can then hop onto the trade. All right. So that will be all for today. I look forward to seeing you on Wednesday. I hope this improves the trading life this week. I hope it adds value to your life. Thank you very much and remain blessed. See the voice of Julian Effects. And you can also be part of the team. You can also be part of the academy. We have a lot of improvements because of requests. We have flashed it. from 50,000 to 100 for 3 months. All right. You get a complete Forex trading education, access to trade signals. All right. Computer appreciation and other related courses and ICT related courses. So we get to train you on this for just 100,000 for 3 months. All right. You can have access to all this and lot more. Deep Minds Academy. Thank you very much and have a wonderful day. Good advice.